That's all, folks.
Good morning, good afternoon, or good evening. I've got no idea what time you're watching this, but it is 5 a.m. where I am Monday morning. It's 5 p.m. over there on the East Coast in the U.S. on Sunday. I hope you enjoyed the full moon. It was pretty beautiful when I was watching it last night. And I actually considered to delay recording this before sending it out because of the controversy which has taken place over the weekend, whereby, just showing you here on Financial Juice, which many of you have, going down to yesterday somewhere, if we can scroll down, I know it's there, I may or may not find it, who cares? So again, Trump making decisions on Saturday saying that duties since April 5 on excluded chips are going to be reimbursed, exemption is retroactive to April 5, and exempting chips from increased tariff on China. This was yesterday. Futures were skyrocketing. I mean, absolutely skyrocketing. In fact, let's see if I can refresh this, because this is from yesterday's cash, and yes, it is there. Again, what he turns around here and says 20% tariffs on computers and smartphones, not 145%. He's over there talking that, no, we're still going to keep everything on there, and the futures that were up 600 points are now up 286 points over on the Dow. So we're still green, still looking good. But don't forget, Tuesday is April 15th. That is, again, and I'll display this as we go. I have respect for this. That's it. Respect. It's not a blind guide, but it is a lot of respect that I have for this due to the accuracy which it has produced thus far. So anyway, I will I'll bring you quickly, just go over here, because, I mean, example, start out here first. We went into the year with 556 trading sessions without a minus 20% correction. We went into the year with 295 trading sessions without a minus 10% correction. And we got our minus 10% correction back on March the 10th. And this week, Monday, April 7th, this previous week, you got your minus 20% correction. Got it in the books. And as I look on my spreadsheet, which is now starting to look like a gay pride flag, what does it show you? What does it show you? Well, it shows me that volatility is still here. There's no question about that. We got our green week, 7, call it, like I said, because of this doji candle on OPEX last week. 7 red weeks in a row. We got a green week. And the previous week, the week starting the month of April, we were down 454 points from the open. We ended this week up plus 409 points from the open. So you kind of washed yourself, as you see there, how we closed April 4th at 50.74, and we closed this week at 53.63, with the highs that we had the day after the tariff announcement, April 3, being 53.96.52. What does it tell you? Well, it kind of tells you that we bought the tariff bullshit all back up, and we bought it up pretty damn quick. Over on the spreads, again, you know, I apologize for my inaccuracies as I try to guide you through these tsunami waters. But there you had your 400% trade there on Friday. Either one of them, the 53.45 or the 53.40s, as you go over and you see that we started the morning out at 5:40 a.m. before the market opened. 53.45, 53.50s, $4. The 52.90, 52.95 is $3. And just shortly after the market opened at 9:39, the 52.90, 52.95s, you were getting $3.50, $4.50, which I already know these 53.45, 53.50s, you could get 450. You could have gotten your 900% trade there, but it is what it is. $4.250 over there on on Thursday. Got into the trade of the week alert again, as we were talking about a green week closing, that being the trade focus there after China increased their tariffs. $3 credit, which, as you saw, ended the week green, so you got your full credit there. We had the double banger Tuesday going back and forth on the calls and on the puts. And there on the on the Monday, because we opened up, oh my God, the market is crashing. Your 49.30, 49.35s, $3 full credit as we closed on Monday at 50.62 with a huge bounce off of the open. So QQQ, a hell of a lot more of a gay pride flag than anything else, because this has just been absolutely bonkers with the QQQ. But again, big green week. Not only a big green week, but a green week a hell of a lot bigger than last week's red week. And you're not far from getting your green month. Same thing over there, which you all know that trade that's on. Tim's crazy. He's out of his mind. A green month? Are you crazy? Well, we're only about 130 points shy of it as of the close there on Friday. So closing above 55.97, or let's just say 5600, end of the month. And, well, there's a couple of people who have no longer decided to be with us that can shine my shoes.
You're in big trouble, though, pal. I eat pieces of shit like you for breakfast.
You eat pieces of shit for breakfast?
So anyway, on the IWM, which is going to be a little interesting because I did a little bit of a deep dive on the IWM, and I like what I see. Unfortunately, I have to scroll a little bit further because I forgot to hide the rows, and my artwork is out of place, so bear with me because nothing is perfect. I do not have breasts, so I am not going to be right all the time. April 11th, the week closed plus 10 points. Not significant enough, but a step in the right direction, and I'll share my view on IWM as we progress forward. But again, this is a very big week. Where's Financial Juice? Where are you? Where are you? Where are you? I know I was just on you. Where are you? Don't tell me I closed it, you stupid muppet. Anyway, here we are. It's a big week. Monday, there's not that much. You got some inflation, a couple of Fed speakers, and blah, blah, blah. We don't want to be there. We want to be here. On Tuesday, it's even quieter. A lot quieter on Tuesday, April 15th. Tax day. A lot quieter. Not really much going on as far as economic data as of right now. But then on Wednesday, it starts to heat up. We got retail sales. We got a lot of other data that's coming out that's, semi-significant. But at 1:30 in the afternoon, you get Jerome Powell, who's going to be speaking at the Economic Club of Chicago. And that will be a luncheon followed by a question and answer. And it will, there's no question, they are going to cover everything in that topic. So on Wednesday, 1:30, Jerome Powell speaks, the OPEX algo should be kicking in full gear. On Thursday, the final trading session of the week, you get the ECB interest rate at 8 o'clock in the morning prior to the market open. And then your basic jobless claims, building permits, this, that, and the other. Little bit of this, a little bit of that, but not really much out there because it is, again, the day prior to the holiday weekend, 3-day weekend. And earnings. Where are we? Earnings. Here we are. Earnings are on. It's earnings season. Citibank will be reporting on Tuesday. That'll be interesting to watch after they report. Taiwan Semiconductor, who tends to leak their earnings early, will be reporting on Thursday, along with American Express, which will be very important. And then you get Netflix after the close on Thursday, which nobody can do anything about because it's a 3-day weekend. And I will make it very clear. Tim, I do not trade earnings. I don't do it because it's such a risky play, number one, and the market makers are not idiots. 38 out of 40, when you go and you trade these, or you play these, or you watch these, you'll wind up seeing that the day after earnings, the options that you were trading wind up being flat to negative from where you got into them. So therefore, having done this for better than part of a decade, I do not trade earnings. I don't do it. We have Donald Trump issuing the new pump token, which I sent out to you there on Thursday, which they're going to consider using gold to buy the U.S. token. I don't do coins. I don't do Bitcoin. I don't do any of that stuff, so good luck to you if you are. And then here again, bringing you back to the Fibonacci spiral. April 15th, there is a low that is expected, and I will discuss this low that is to be expected as we progress further here. But I think we have covered everything that I wanted to cover other than where we can start. Last week, Friday, I sent you this out, the terrified to buy the dip. And I was kind of ripping people's heads off because everybody was starting to shit themselves. And I told you there, if I offended anyone by the tone or language used in the video, I honestly don't give a fuck because I'm the one and only one on the planet that's dedicated to trying to help you not be you so you can be successful and stop working for someone else. And I had this pointed out for you as far as that. Bulls be warned. Come there on, here's where we get very interesting as we started the week out, because as we started the week and the weekend a week ago video, your 23-6 retracement pivots, which I suggest one can go back and backtest as to the why of them on market correction bottom algo buy pivots. Shared you here over on the SPX, shared you over here on the NDX. SPX is the brain. NASDAQ is the legs. So again, with the April candle that I discussed about, if you want to turn around there and go into the 5145, 5150 puts, you get into these at better than 350. I'm still looking for 5,600 at the end of the month, but again, another trade for you to take advantage of if you want to go into that. Come there on Monday morning, and as I said, we have hit the highs. We hit the 2021 highs over on the NASDAQ, and over on the Russell 2000, we were nearing that big bottom area. The ES, same thing, hit that all high. Had your September 19th plays that you could take. 475 calls over on the QQQ. The IWM over here on the September 19th 200 calls. Both of those excellent productions. And then into the trades that we took, which I don't really want to go into now. I will go into at the latter part of this. So let's go and get on to the charts, shall we? Start out here with my 0 DTE chart for the SPX, which is what I use on my screen when we are in real time, and showing you the week 5-day chart at 1 minute. And the reason I'm on the 1 minute is to bring you over here into Monday morning, and actually zoom you in right here from where we opened up. We open up over here on the week, 49.53.79. And as you have here on your white line being your 23.6 retracement to the 2009 lows, we spent 1, 2, 3, 4, 5. 5 1-minute candles were spent at that pivot. You never saw it again. As that came off, because it was on Monday, we broke below minus 20%. Finally, getting that minus 20% correction into the books, 49.17.94. And then we came down again, and actually, let's go through this. We start out here, 49.53.79, and we drop down to 48.97.45 in the first minute of the day. And as we come here at 9:51, we are above 49.17.94. Actually, no, it's over here. 9:53 a.m. So we spent less, call it 23 minutes, is how long we were in bear market territory. on Monday. 23 minutes. And then we came over here and we did it again on Tuesday. On Tuesday, we spent a minute and a half in bear market territory. And that's it. And from there, here we are. Up here above Sweet Home Alabama. Sweet Home Alabama being the actual music theme for everybody to go home to on Friday with your better than 400% credit spread that you had the ability to take there on Friday. So where are we? Well, I'll show you where we are coming off of this move, just looking on Friday. And again, the tracking that we have been doing for what we are supposed to be expecting. From an Elliott wave point of view, we are supposed to expect that this is a wave 4. And from this wave 4, we will have one more wave to the downside. That wave to the downside to be determined. I've already discussed with you the amount of time that we have spent below minus 20% from the all-time highs. I've already discussed with you the significance and the importance of the 2009 23.6 retracement, which we spent almost 5 minutes on. So I'll zoom you out here, and I'm actually going to go to February 19th where the highs came in, because this is where your all-time highs were placed, and walk you through this, right? Kind of got to walk through this and go back and forth, back and forth. So bring you on to here to, again, understanding this Fibonacci spiral. So February 19th is your highs. It's where your starting point is. February 22, dos por dos, your low. 24, your high. 27, your low. You're going on Fibonacci numbers is where this hazard works. So bring you on to your charts. Here is your low, 6,008, right over here on February 21. And then right over here, 2 days later, we have our high. Very clear, being able to be seen, high. That's it. That's all that it is. That's all that you're looking at because you're in the early stages of this. So bring you out here again, bring you back over onto what we're talking about. February 27, your low. March 4, your high. So let's go back onto the chart. Here is your February 27, a low, a very significant low, very easy to be seen, and then your bounce that you took off of that. And then over here on March 4th, March 3, March 4, we had a one-day slippage, your high, right there. So again, it is to be determined, it's to be interpreted, it's completely up to you, but I have found it to be extremely accurate from what I have been tracking on it, and it's the first time I have ever tracked it. So again, I'm giving it respect, but I'm not giving it biblical rationale. Over here, March 13th, we have our low, very significant low, and everybody remembers the low because here it was, we were coming into OPEX, and I believe this is also in tune with our full moon. Let me go check. Ba-boom, there is our full moon. So we come back onto this, and we have our high over here on March 25. So we come back onto our string. March 12, our low. March 25, our high. Some of these have been absolutely amazing highs and lows, like you see over here, March 13th, like you see over here on the March 25, March 24. So from that March 24, or we can just zoom out here on a 15-day, this is what we see. We see that AB for the A wave down, the AB for the B wave up, and from that we have been in this very clean, very clear 1, 2, 3, significantly. Could this be the 4? We do not know. However, we are due to expect a low, so I would undoubtedly already be prepared that we will be looking for a low to be coming in, some kind of a dip somewhere into something of significance that we can see with our own two eyes, with the 400-day moving average being there at 5,300. Going down here into the 4,800, 4,700s, not me. I do not see it. I don't see it. Don't see it showing up. Don't even see us coming back to minus 20%. Don't see it. But a dip for a low, and again, bring you back into just giving this a little bit of respect. Where are we? The next high, not all the way up high, but the next chart movement pattern high should be coming on May 19th, which again is some of the reasoning as to why I went out with some of the trades that I took last week. So that's what we're looking at, and that's what we're due to be expected. I'll bring you out here onto the full moon while we're here because I do not have this up on the other charts. But again, on your full moon, full moon, dead spot on the top. Full moon back here in December, dead spot on the top. Full moon here in January, dead spot on the bottom. Same thing over here in March. Dead spot on the bottom, bounced, took it out. Where this full moon places is going to be somewhere very obviously, let's duplicate this, it's going to be somewhere in this area. We don't know that because we don't know it, because it hasn't taken place yet. Could be, very hard to stretch, but it could be that our full moon low is in. And again, we will not know that. We will be using it as a guide, but any kind of breakup above 5520, breaking back up into the 5600 range, and I will start to be a little bit more significant about this being our low being placed. We will see once we get into next week. Not this week, next week, after the full moon window has closed. So again, wide view, looking at gaps. Only gaps, and gaps only. All that we did was fill all the gaps from 2024. We got this gap here filled. Little tiny gap filled. And there is one little itty-bitty gap. A little itty-bitty gap down there below the 2022 highs, which we never took out, that we did not fill, going back to the 2024 open. That's it. That's all that we did. And as you can see here, since we're on this chart, the weekly candles. Red, 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 red. Doji, red, red. And here was our big green week last week. So these gaps to the upside filling, I see absolutely no reason why they wouldn't, as I've shared all the supporting data as to why they should, because of how oversold we are on a wider time frame. Bring it on here to the futures just to be able to show you how the futures recovered on the ES, the 400-day moving average. Nothing that is abnormal or, one of those ones that you need to have on your screen at all time, because it's a 400-day moving average. Rarely will you ever even see it on your screen. But it has been one of the very significant factors as we have been here during this week. Therefore, it's on the screen. But I bring it here more so to show you your red trend line up here above is not a trend line, but instead your 50-day moving average. The yellow being the 200-day moving average. And on Friday, they both sandwiched. So on Monday, we didn't think it would happen until early part of May, latter part of April. Well, we're into the second half of April, and the death cross has occurred. Bring it on to the NASDAQ, and the same thing. NASDAQ, 400-day moving average. Here is your death cross taking place. Your 50-day moving average moving below the 200-day moving average. Again, one of those things for you to consider as you want to go into your trades. QQQ, same thing, big wide view. I got two different views on QQQ. Both of them need to provide themselves with a little bit of proof, but regardless, we're getting a bounce. So zoom you out here into the, what, can I do it 1 year? I can do it 360 right here. The sell-off essentially bringing you down to almost the 2024 lows, filling all of the 2024 gaps, and that's it. That's all that we did. Bring you out here onto a 15-day, and again, the same thing that we are expected to be looking at with the Elliott wave finishing off is you have your ABC to the downside for your wave 1, your ABC upside for your wave 2, a not drawn on the chart, but significantly clean ABC 1, 2, 3, 4, 5, ABC 2, 3, 200-day, 200 extension, almost perfectly hit. And the big rally last week. The big rally coming there on Wednesday, with Wednesday being one of those just incredible days that you're going to tell your kids about 30, 40, 50 years from now, because it'll never happen again. Is this wave 4? We do not know. We do not know. But again, for the wave C or wave 5 to finish off wave C, breaking down here below 400, I don't see it. I don't see it. I'll bring you on here onto the 5-day, 5-minute, which should be able to fit on the chart. And again, I don't see it. Here we are, the NASDAQ breaking up above minus 20% from the all-time highs there on that rally on Wednesday. No longer in bear market territory. Bear market territory lasted the better part of 4 days. We need to get up into that 471. We get up into the 471, we start putting check marks into the box saying that, okay, the correction is completed. Bring you over onto your VIX, and your VIX having been elevated in that 21 region for the better part of 2 weeks as we went into the tariff announcement on April 2nd. Kabang! Oh my God! Yeah, well, 50 Cent, he made some money, and anybody else who took those other April 17th VIX 20 calls, you made some pretty damn good money as well. Lucy Passport a couple of times during the course of the week, and here we are coming down to the first and foremost pivot on Friday, 3620. 3620 is only the beginning. We need to see below 2884. Below 2884, we have the tariff gap that is to be filled, back down into virtually 2102. And until we start seeing significant movement below 2102, there's going to be a little bit of caution. There's going to be a little bit of volatility as to swings, which are going to continue in the market. IWM. So this is what I trade off on a daily basis, which does you watching this no good. And I bring you over here onto a little bit of a clean version to be able to see how you have your gray pivots up here and your A, B, C with your C, as I share, being 2 times your A wave, which was essentially the same thing as your B wave. B wave to the upside was 2 times A on the making the C. And here we are down here where we're at. So clean and zoom you out onto a 5-week, which almost gets us to, wrong one, this one, default. Taking you out here to a, 20-week. You're in this gray zone, this gray circle zone, which is where the momentum shifts, bullish, bearish. That's the way it's been for the better part of 3 years. 196, that's your spot. But coming on to this and zooming out, seeing where we're at here with everything, it's pretty damn clear. IWM coming off the 2009 lows, you can see a 1, 2, 3, 4, 5 for the primary one, right up there into the 2018 highs. ABC, COVID, lower high, lower low, 1, 2, 3, picture perfect, being your primary 2. Your move to the upside here into the 2024 highs, 2021 highs, coming off of COVID. Very clean. A, B, 1, 2, 3, 4, and then your 5, almost to the 161.8 extension, almost perfectly. Wider view, we come out here, looking at your extensions coming off of the 2009 lows into the 2018 highs, down into the COVID lows, and all that we managed to get to was the 100 extension, which strongly suggests we still have higher movement to come, because this is typically where your wave 3 will finish, somewhere at the 1 to the 1.236. your drop over these last 5 weeks or 5 years. 2021, bum, over into here. Again, I can see this as an ABC flat wave 4, very clean, and now the final last stage IWM to the upside. So it's supportive of the bigger, broader, wider view that we are due to expect. That being that we're extremely oversold. We've gotten extremely oversold even onto the monthly candle, which already had massive negative divergences heading into it. And thus, as we progress during the course of these next 2 weeks, seeing the SPX break up above 5,500, 5,550, we start getting more and more evidence that the market has bottomed and we are into our correction. So I bring you back onto the screens to finish you off here. These were your spreads, your trades during the week, Everything has been making money. Everything has been making money. I have a trade that I share here. So I got into the September 19th QQQ 525 calls at 690 average as we dropped last week. Again, this was on April the 3rd when I got into the trade. I will pull these up, and here they are. So they're out of order. They're not in order. Where are we? That's IWM. This is Amazon. This is VIX. This is Apple. I did not have the SPX on screen. So let me start you out here with the IWM. I'll pull that one up as we progress further. This one we'll get back to. The entered 55.90, 5600. Put credit spread for the month, $4.350. Everybody got $4. The June 20 Apple 225 calls, 460. So here they are. Currently, they're at break even. That's where you are. Your IWM, I don't even have to go back and forth to the email. The IWMs, again, those were the risky trade. Only after the trade was entered because I got in a little bit too early for IWM to get back up to 210. I got into them at $1.70. They broke $1.90 there on Monday for a brief second. We're trading here at 63 cents. So this is, we'll see. The Amazon 200 calls that I got into last week, got into them at $3. Well over 100% there on Wednesday on that huge day. Still up a little bit better than 30% right now. I like Amazon for that 200 area. I can remove this. Yes, remove it. The VIX July 16th 20 call, 20 puts. Excellent. The day that we're entered to get a profit to be able to be taken. And since then, we have had a little bit of an inflated VIX, and therefore they're fractionally below $1.25. Bring you back onto the VIX chart real quick and show you why I took that trade specifically. And the reason being is this is what you're looking at from a short-term point of view on the VIX. This is your wider view point of view on the VIX. And me personally, I expect that we are going to get that VIX back down here into the 14 range. That's what I'm looking for. The VIX back down into this 14, 13, 1339. Get everybody over bullish. And with the 20 puts coming down here into 14, 13, they're easy, 300-400%. So I leave you off with the last two. Oh yeah, here's the Amazon call and there's the VIX call. But yeah, again here over on the SPX, the QQQ, the 525 calls, 690. As I sent out that email during the course of the week, I closed half of them off at over 100%, and of 100%, 50%. I don't remember because it's Sunday morning. And anyway, futures are about to open up, and you are going to get your reality check of what is happening with Donald Trump, and we will adjust and we will make our changes and our wishy-washies and our moves. But the only thing that I will remind you again, because it has been working very, very well, April 15th, should see a low. So we'll see what it is. We'll see what we get. But according to Weekend Wall Street and how we're gapping up still, even though Trump said, no, we're not going to do it, we should be getting that final wave over on the SPX to take us up, like we were saying, somewhere up into that full moon, up into that 5,500 range, and then we have an opportunity to see whether or not we're placing a full moon top or we're placing a full moon bottom. Again, I am still of the opinion that our bottom is in. Our bottom is in. We could be looking here at our final fifth, get a quick move to the downside, which we then shift from here, from this bearish count into a bullish count, with this being the wave 1. Then we have our wave 2 bottom, and we start projecting where wave 3 is going to take us as we go into the summer. So enjoy your Sunday. Apologize if I wasted any of your time. And I hope you all enjoy your Sunday prior to the market open, because, again, this is Holy Week. It's a very significant week for a number of people. And we should all be respectful to one another, because you got to remember, you're not doing this for yourself. If you are doing this for yourself, you're fooling yourself, because you're not doing this for yourself. You're doing this for other people in your life. And the other people in your life are the ones who are going to give you the motivation to do the things that you didn't think that you could actually do.